Welcome to Classic Value Investors Radio. My name is Mariusz Skonieczny, and today I have with me Rick Rule from Sprott Asset Global. How are you, Rick?
I'm fine. How are you, sir?
I'm very, very good. So I suspect that you must be a very happy man lately with the precious market.
Well, it's only a value guy that recognizes the odd joy in other value guys. Yeah, absolutely. I think, we're seeing a sell-off in the physicals, which from my own point of view is very good because I'm looking to add to my inventory of the physicals. And I think in the junior resource stocks where we do a lot of work, we're close to capitulation. And capitulation is a true value investor's dream. We haven't seen capitulation in the junior resource equities since 1992. So it's been 21 years since the situation was as dire from the point of view of the uninformed. We're coming into something that's not just interesting, but extremely valuable.
Yeah, I totally agree with you, and I'm getting lots of emails, people worried. I mean, it got to a level where I think some people are close to committing suicide. It's just unbelievable. Today, what's interesting, I got an email from an individual, very intelligent individual, and he pretty much told me that uh, the mining companies are not real companies. They're just these things, I guess with ticker symbols, and they're not real companies. And I just stood there for a second, and I said, "Am I dreaming here? I'm in a market where the sellers don't even think that whatever they're selling are real companies."
Well, of course, with some of the junior mining companies, he's more right than wrong. Uh, but the truth is that the market, of course, took the bad names up with the good names, and now they'll take the good names out with the bad names. Uh, One wouldn't want to buy the sector in junior mining or anything else, but certainly for value investors, for contrarians, for people who are willing to do the work in the sector, you will see situations next week. I'm almost certain of this, where you have issuers selling at half net working capital, where in effect dollar bills are on sale for 50 cents. And you might say to his friend that if he was walking down the main street of his town and a person came up and offered him a dollar bill for 2 quarters, the correct answer to that question is yes.
Yeah, yeah, that's a very good way of putting it. But I remember when I was listening to, I listened to a lot of your interviews, and in one of the interviews, you said that one book that really had a big impact on you when you started was The Intelligent Investor. And I forgot exactly which chapter it is, but you were talking about what uh, you, what prices really mean, and as Warren Buffett would say it, price is what you pay and value is what you get.
What you get,
And
that's right.
and what amazes me the most is that there are a lot of value investors out there. I like to call them value investors, wannabes, because we all read the same books. The Intelligent Investor is one of the most uh, popular book, yet so few people get it. And now I hear a lot of complaints. Well, the market is up. I can't find any deals. And whenever I say, well, why don't you just look at the mining stocks? They're just simply not interested.
Great. I mean, all I could say is great.
Yeah,
Harkening back to the book, of course, um, there were two defining chapters in that book from my point of view, both of which were appropriate to this conversation. One was the spectacular chapter on Mr. Market,
right.
the fact that the market is a business partner who is a manic depressive and one day would like to buy your assets for twice what they're worth, and the other day would like you to buy his assets, which you're partners in, for half what they're worth. And we are going to hit the depressive part of Mr. Market with regards to the junior mining shares, I suspect, next week and the week after. The other part, which is also appropriate to our discussion, is, of course, the part about the margin of safety. And junior mining companies are often minus that margin of safety. For the most part, of course, they aren't in production. They aren't generating cash. They're going through cash. And one of the things that people miss is that the story, if you will, is valueless. What matters is the reality, and part of the reality has to do with the fact that in a capital-intensive business, if you don't have capital, you don't have a business. And people who lose sight of that probably shouldn't be in the sector. But on the other hand,